How's it going, everybody? This is Tim with King's Options. We skipped last week mostly because I was not in the position to be able to do this. It's a little bit of a different week, and we're coming in kind of fresh to this new week. So in review, we'll actually have a couple weeks to cover, and there should be a lot of changes on the charts, which some of you may be far more familiar with than I am. In any case, here are the actual earnings supposed to be coming up in the week ahead. Not really a ton of names. Ooh, BlackBerry. I remember those. I'm surprised they're still a company. At any rate, so there you have it. Pause, take a look, whatever you need to do there. All right, let's go to the sector tracker. And looks like on the whole, it was a bit of a mixed bag. Definitely more positive than negative. But we do have about half the sectors making gains, while half of them heading the other direction. So that's interesting. Technology up overall. Communication services, not surprising. Discretionary over staples. That's interesting and says something about consumer spending, at least in the short term. This is only over the course of the last week, as opposed to the last 2 weeks. But that is interesting. Energy down, again, staples down, healthcare down, materials down, real estate down, utilities down. Okay, so more of the, I'm going to kind of lump some of that stuff into blue chip, but for the sake of descriptors, let's call them some of the more boring stuff, right? At least when it comes to shopping. At any rate, that's how we're looking there. Again, kind of a mixed bag. We'll see what that looks like on the charts in a minute. And then for the upcoming week, looks like for major market movers, Wednesday, Thursday, and Friday are going to be the days that we want to pay attention to. Wednesday brings us new home sales, petroleum status report. Thursday is going to be bringing us durable goods, as usual, the unemployment reports. GDP, that should be interesting, and that's going to hit at the same time. Yeah, so that's going to be fun. And then we've got existing home sales, trading goods, and apparently hogs and pigs. Friday, personal income and outlays. That should also be very interesting, especially given all the changes in the economy currently. I don't know if you all heard about like the H1 whatever those visas are that companies can bring people in to work, had a $100,000 price tag put on them per person. The companies bringing them in, so we could actually see personal income go up and unemployment go down, as that's going to have a lot of companies hiring more American workers in those places. So let's go ahead and move into the charts themselves, starting with the RTY as usual. And the last 2 weeks, my goodness gracious, have basically just gone straight up. All-time highs. This was the all-time high, 24,771. That's the biggest one we had on the board. So now this is the all-time high. There you go. This never really got filled in. I'm going to leave that on the board. However, the next levels that we're going to be looking at, I'm kind of wanting to stay here. And the reason I want to go here instead of down here is that we had a big jump up. We got a lot of indecision around this price range, which is also the top of these price ranges, and this is where we first peaked into that area before. So this seems to be a pretty solid area. If we do drop down, obviously we're going to need to see if defense steps in around in here, and we will still have a good bit of liquidity below these lows right in here before we hit this next level down, which we're just going to move some of these lines. We'd be right about there, right about there. Again, I'm just looking for flat bottoms, right? Nothing too fancy here. I mean, this is not rocket science. We'll go with the low of here again. Well, this low, but the high of this inefficient. Thank you. Could not think of a very inconvenient area, inefficient area for trading. and we'll see what happens should we actually drop down that low. Now, keeping in mind also as we get near the highs here, these all-time highs, we're extended on the Keltner channels. We're 3 ATR, 3 ATR, even up here where it stopped and dropped down from 3 ATR, maybe drop down to a little over 2. You have to kind of see that in your head. But that's how the RTY looks on the whole. Does not, in no way bearish. The only way I would say anything looks bearish on this, and probably the other ones that we're going to look at as well, is the fact that this constant rise is very hard to maintain. At some point, we're going to have reversion to the mean, right? And we'll see how and what that looks like. We could just move sideways, let the mean come up to it, and then spike again. Very possible. We could have some sort of news event come out, drop down, see that, maybe spike a little bit below it, pop up. But on the whole, everything looks very, very bullish with the larger frame moving averages. So the 200, the 100, and the 50, everything is stacked the way it's supposed to. The 100 just got back above the 200, so this is looking good. This 21 EMA actually runs off Fibonacci numbers. There's 5. The coloration runs off of 5 actual numbers that are in the Fibonacci series, that when they are stacked appropriately, it goes green, confirming and giving confidence in the momentum of the move. And then, of course, yellow is when those lines are all mixing, and red is when they're going the other direction. But no, everything looks very, very pretty. Yeah, let's go ahead and move on over to the YM. Take a look there. And not too surprising, looks very, very similar. Not quite at the 3 ATR, so that's interesting. Another all-time high. We're going to move that here. Okay, the next to the downside. Honestly, this is a nice sweep. It really is. We didn't get much on this inefficiency. Kind of. It's like it tried to fill. Wasn't real convincing on that one. Not seeing one really since that point. So we're going to leave that there. But we're going to go ahead and take this line and say probably at this area. We'd see if we, like all these buyers that came in, if we drop back down below here, there's going to be some liquidity in here. And then we get back into this price range, in which case the liquidity pools are going to be in this area, at which point they might as well just go ahead and drop it in the inefficiency and take out liquidity in here. And then the next area down, or not even that's the way I would see that. We're going to just leave those lines on there. Same thing, 200, 100, 50, all looking good. Momentum looking good, and actually this is sitting probably the same thing, about a 2 point low ATR. So a little bit up there, but at the same time not sitting on the 3. And at this point in time, none of these hit the 3 ATR. So we could definitely see some movement more to the upside on these without it being any kind of surprise at all. We are getting a little bit toppy here. I mean, you see these wicks popping up and a bit of indecision here. So maybe we see a bit of reversion happen, or just pull back and create some consolidation just above this low area here. Yeah, we'll see what happens. Just some thoughts on how that looks. Let's go to the ES. Oh my goodness! That's quite the run up on that, actually. Man, that really is. Look at that. It's crazy. Absolutely crazy. Okay, so new ETH sitting up here. All-time ATH all-time high. Next one, I'm actually going to take this line. So you've got this inefficiency between here and here. We kind of dipped down again, tried to fill it. Not overly convincing. Really isn't. So I'm going to create a rectangle for that inefficiency. And call it candle body. And really, this isn't even more about inefficiency. It's more like a gap. Yeah. We can call it a gap. I like that better. Do we come down and fill this gap completely? That's the big question. I should put it at the bottom, but I'm all right with that. Now, no, I'm not. I'm not all right with that. Okay, so there we go. Now that looks a little better. And yes, these are ballpark. I'm not going to go nitpick it. You get the idea, right? Either way, everything else looks good. 200, 150. Everything looks happy. We never even popped into the yellow on this. This is very strong movement. Last time we saw yellow was late 2024. It's been running green even on these larger pullbacks. ES is looking at SP 500 looking really good. But again, how long can we stay there? We are sitting 3 ATR, 3 ATR, 3 ATR, 3 ATR, and close near 3 ATR. So I kind of think this is an area of weakness, or could be, that if we do see some pullback, it wouldn't surprise me to come back, kind of fill this in, and then see if we hold above like this, almost like a topping level right in this area. Major points of liquidity, aside from the fact that we've got a gap to fill, are going to be below here, because everybody that was up here, when this popped back down, so all these buyers, right, still have not been taken out. The defense came in, pushed it back up. These the buyers from all this, that went from, gave it the confidence to go from here and gap open, they haven't really been taken out. So we'll see how that goes. Yeah, I don't think so. So this swing low, I would definitely watch for that. If we came back, look for it to attack it, and then maybe close that gap. And that's all I've got for that. Let's go to the NQ. Okay. NQ, wow, closed above the 3 ATR. That's actually a little uglier. I'm less confident. With it way up there. That's huge. Big gap in here. Yeah, I don't. This looks sketch to me. I think we need to see some more price action in here. And being at 3 ATR, we got a high probability of reversion to the mean. Means coming up to this area would not surprise me to see some decent sell-off. I would be surprised with a spike, given how confident people seem to be at present. But I could definitely see a decent sell-off for a few days, fill in some of this area, close this gap, and let's go ahead and mark that gap as well. Okay, and closed open. Okay, we tried to fill it. Same thing look on the ES. Same look as on the ES, but not filled. And NQ, obviously. So yeah, let's take this out. We don't need that. I'm gonna say, then call it that swing low and or gap fill, and that's all I really want to watch moving forward. Now, if we were to lose this, our major points of liquidity are way down here. 1, 2, 3. So this whole big open pool down here, if we lose this, right? And that would be quite the pullback. Could happen. We'll see what happens. Yeah. All right, and that's about all I've got for today. No words of wisdom. You have to be wise before you can give those out. So I will refrain, and I'll make my attempts at that later. In the meantime, I hope everybody has had a good 2 weeks in their trading, and careful trading coming up. All right, we'll talk to you soon. Thanks. Bye.